Hi guys, Scott Schweiger with Burnt CPA here with another Tuesday tax tip. Tax season is getting pretty crazy with moving deadlines and changes coming from the Treasury. Last time we looked at how the current global health crisis may impact tax season. Today though, let's forget about all that and focus on something else, like issues with cryptocurrencies and taxes. Sounds fun, right? Hopefully at least a little interesting. The very first tip of this year was that the IRS was going to ask about virtual currency on your tax return. Part of the reason is the way the IRS treats virtual currencies, which is a technical and kind of complicated area. But without being too technical here, they aren't exactly treated like currencies. They're treated more like property. Think investments. A quick example. I heard this story on the Simply Tax podcast, and it really illustrates the issue of not treating virtual currencies like currencies. Say you went to Starbucks and you bought a cup of coffee. There's not really anything taxable going on here from an income tax standpoint. But let's say you bought the coffee with Bitcoin. The way the IRS sees it, you didn't just exchange your Bitcoin for a cup of coffee. You essentially sold your Bitcoin for the cost of a coffee. And since Bitcoin is, well, the easiest way to wrap your head around it is to treat it like a stock. So it had a basis. Say you bought your Bitcoin, or rather fraction of a Bitcoin, for $3. And then you buy the coffee from Starbucks, which is $8. So you sold for $8. And if you think like a stock, if you buy at 3 and sell at 8, you have a $5 gain here. In the end, you bought a cup of coffee and now also have a $5 gain to report on your taxes. And depending on how long you held that Bitcoin, you either have a long-term or a short-term gain to report on your taxes. See how it gets complicated really quick? This creates a great deal of confusion around what types of transactions are taxable when using cryptocurrencies. And it creates the need for thorough records of each one of your crypto transactions. Though there are some tracking services like CoinTracker or Gem that can really help you out. Anyway, that's enough fun with crypto today. Please be aware that your virtual currency transactions aren't outside of the realm of taxes. You should consult with a tax advisor if you are unsure about the tax consequence of a particular transaction. The tax impact on virtual currencies will depend on your particular facts and circumstances that surround those transactions. So this is not intended to be blanket cryptocurrency tax advice. Thanks for watching, and please join me next week for another Tuesday tax tip.